Me. My name is Haley Gant. I am one of our certified IRA specialists here at Quest, and I really enjoy working with our entire team of marketing and IRA specialists to help to put on these events and webinars for you guys every single week. I am very excited to have Miss Tracy Z Rewey with us today from noteinvestor.com, and she is going to be talking to us about investing into note partials with small dollar IRAs, which is a very popular topic. We always get questions about it. And so whether you have a small IRA or looking to maybe creatively grow some of your funds, this could potentially be a great investment strategy for you. So we're excited to learn about that today. But before we get started with the main presentation, I do just have a couple of quick announcements for everyone as we kind of let you guys get signed on. And kind of let you guys know a little bit about what we do here at Quest, as well as some of our upcoming events. So this shouldn't take too long, but we do like to go through this. I know on a lot of these Saturday webinars, we actually get a lot of new people joining us every single week. So if it's your first time attending one of our Quest events, first of all, welcome. This is just one of the many educational webinars and networking opportunities that we host here at Quest. Quest is a self-directed IRA custodian. We're based out of Houston, Texas, and we basically help teach Americans how to truly diversify their retirement accounts by learning how to invest into non-traditional assets. So at Quest, we don't hold any stocks or mutual funds or any sort of those normal kind of publicly traded securities that most Americans only hold in their retirement account. But at Quest, we really teach you how to truly diversify that retirement portfolio. And we really like to do that by bringing in different guest speakers pretty much every single week from different areas of expertise in real estate investing. Now, so important here. We like to give this disclaimer at the beginning of every single one of our presentations. This presentation, as well as any other class that we teach at Quest, is strictly for educational purposes only. Please be sure to do your own due diligence before entering into investments. You know, you're dealing with retirement money here. There's a good chance you've worked a long time to save up this money to help you save for retirement. So you want to make sure that you are working with professionals, that you are structuring your deals properly, and that you understand what's involved on your end as the client whenever you are entering into deals with your IRAs. Now, as I kind of mentioned, self-directed, it's really just a marketing term. The IRAs that we hold at Quest legally are exactly the same as any IRA that you have at any other custodian. The only difference is the types of assets that your IRA custodian allows you to hold. Most of your traditional custodians like Fidelity, Charles Schwab, their platforms aren't really set up to allow you to hold privately held assets in those accounts. Where at Quest, that's exactly what we specialize in. Our IRA specialists can help you go through a free consultation, learn how it works, learn how you can get your funds moved over. And as you can see here, there are a lot of benefits. It allows you to invest into the things that you know best. You have more control over where your funds are invested. And you could potentially avoid all income taxes or capital gains taxes on your investments in your IRA. So your IRA grows either tax deferred or tax free, no matter what types of assets you're holding in that account. So it's a huge advantage to be able to shelter at least some of your real estate investments from your own income taxes and capital gains taxes each year. Now, this slide right here, I do want to let you guys know if you really want to know how to truly utilize all of these types of accounts on the screen, sign up for a free consultation with one of our IRA specialists. We are trained to actually walk you through certain questions where we can find out, do you have a 401k? Do you have a Roth IRA? Do you have self-employment income? But just know that most of our clients out there, they don't have just one type of account. They might actually have several accounts between themselves and their immediate family that you can actually partner together. You can self-direct all of these types of accounts on the screen here. But reach out to us or watch some of our other classes that we have on our YouTube channel, where we really actually have a little bit more time to just go in depth on all of those accounts there. Now, as I was mentioning, you do have a lot of different investment options whenever you are investing with an IRA. Real estate, private placements, promissory notes. Today, we are really going to focus in on promissory notes. So a great passive option that you have with your IRA. But remember, you get to choose what types of investments you want to hold in your retirement account. So, no matter what you might specialize in, whether you want to hold rentals, you want to invest into multifamily, or maybe just be a passive private lender or purchase existing notes, you can do all of this with your IRA. There are a few rules where, you can't really personally benefit from your own investments. Again, be sure to check out our YouTube channel, which we should have linked in the chat for you guys, and you can find more of our educational resources there. Now, these are the steps. It's pretty straightforward, to be honest. Step number one, right here, this is where you want to start your relationship with an IRA specialist. Our job is to make this as easy as possible for you. We'll hold your hand as you open up your account, as you get your accounts funded and then ready to fund your deals as well. But we can help to walk you through this. It's really not that different. It's not that complicated. It might seem like it at first, but something that we really pride ourselves on here at Quest is the ability to walk you through these things and educate you about the process. That way, as you're going through this, you feel comfortable about what you're doing with your money. When you get off the phone with us, you know what you're ready to do next. And we're here to make it an easy process on you. Now, if you've watched our webinars before, you've probably heard all of that before, but I do just want to take a couple of minutes to touch on a few of our educational resources for you. Beyond this class, we do record all of our webinars, all of our classes that we host. They are available to rewatch on our YouTube page, and you can rewatch them at any time on Facebook as well. I personally prefer YouTube. It's kind of a little bit nicer to be able to see them in a more organized format. But we have an education center on our website. We have free webinars every week. We have free consultations that you can establish with an IRA specialist. And my personal favorite event that we host, because I actually host it myself, is our virtual networking happy hours. These are awesome. They are on the first and third Wednesday of every single month. And basically, we started these happy hours up in August when we realized that we weren't really going to be starting up our in-person events, at least at this time, hopefully a little bit later this year. But I know you guys love to network and you want to be able to find deals and continue to build relationships with other investors. So be sure to join us at the virtual networking happy hours. It's actually set up as a Zoom meeting, so everyone gets a chance to talk, everyone can share their camera, and we all kind of have a glass of wine or a beer together, and then we kind of chat at the end. It's a lot of fun, and we've had anywhere from 50 to 70 investors from across the US join us at every single happy hour. So they've been a lot of fun. It's been really cool to kind of grow that network and see those grow. So be sure to join us. Kind of makes me really happy to see those grow. But a few of our just large events that we have coming up this spring, if you are a real estate agent in the state of Texas and you are looking for some CE credits, be sure to join us on February 18th. We are hosting our famous 3-hour CE course. We host this a couple of times a year, and this is an in-depth, obviously it's 3 hours long. It's an in-depth course about how to get the best out of self-directed IRAs, how to start the conversations with other investors to potentially open up doors to private capital for you. And this is a free event. It'll help you kind of grow your real estate business, as we like to say. You can RSVP very quickly through that QR code right there. And we also have our next edition of QuestCon Live coming up this April 16th and 17th. So it's actually right after tax filing deadline this year. One of our favorite days of the year because it kind of slows down right after that. But not this year because we'll be hosting our big conference right after that. But it'll be a 2-day event, about 20 different guest speakers. QuestCon is a paid event. It is not a free event, but we work very hard to bring in a lot of different speakers and panels from pretty much across the US for you guys. So we are still in the process of kind of figuring out where everyone fits in the schedule. So we will be announcing the speakers in the near future. But be sure to get your QuestCon ticket. You can get it at our website. And if you miss pre-sales, reach out to me personally. I will probably have a discount code for you. So that's about all that I have, kind of give you guys a little bit of time to kind of figure out who we are and let you sign on before Tracy gets started here. But, we are really easy to get a hold of. Give us a call, send us an email, or if you are interested in a free consultation, take out your phone, scan the QR code right here. You can request a consultation in about 30 seconds with one of our IRA specialists, and we will give you a call on Monday. And no matter where you might be in this process, whether you are brand new, whether you're maybe just laid off and ready to start investing and learn how it works, reach out to us. It's always free to talk to us. We go through some pretty in-depth training internally at Quest. And that is really just to help you guys be able to learn just as much about these IRAs as we can teach you. So be sure to scan this if you're interested. We'll also put our contact information here in the chat. And that is all that I have. Let me stop sharing my screen. Tracy, I am so excited to have you here with us again. Your presentations are some of our most popular that we host here on our platforms, both for the live viewers and the residual views as well. So you're a powerhouse. We're excited to have you here today. If you guys have questions throughout the presentation, put them in the Q&A box. I will be coming back on at the end, and we'll get as many answered as we can for you. So Tracy, go ahead and take it away. I'm excited to have you back with us today. I'm excited to hear your presentation.
Thank you, Haley. It's always a pleasure. We have a lot of fun doing this, and I'm looking forward to sharing a panel with you at Cashflow Expo for wise women investors. I know you buy and sell and invest a lot too, so it's always fun to talk about that. So welcome, everybody. I'm Tracy Z. I don't know if you've seen me speak before or not here with Quest. I buy and sell real estate notes, and I have been doing that since 1988, so over 30 years, and I specialize in owner finance notes. So if that's a new concept to you, we actually did a webinar with Quest, I know that's still archived, that really deep dives in what is owner financing. But in a nutshell, it's when a seller sells a property and they allow the buyer to make payments to them, also known as an installment sale, instead of going out and getting a traditional bank loan. So really it's a way for a seller to be the bank. They accept payments over time. In a state like Texas, they secure it just like a bank does with a note and deed of trust. It's a lien against the property, and they have all the rights of a bank. So if the people don't make the payments, they can pursue foreclosure and take the property back. But we like to make investments in performing notes, and that we're looking for the cash flow. And the cash flow of performing notes tends to be a good fit for a self-directed retirement account. Some people like to specialize in non-performing notes. That's a little bit different strategy. And that's more where you're going to try to get them repaying, or maybe you do want the property back. But for those of us that are first position performing note buyers, we like that cash flow. We especially like it for our self-directed retirement accounts. So today I'm going to talk a little bit of a segment of note investing, and that's something called the partial purchase. I'm going to share my screen now so that we can look at the slides. All right, so I'm just going to peek in the chat really fast. Just let me know you can see my slides there.
Yes, you are good.
Excellent. Perfect. Thank you. All right. So we're going to talk about the partial purchase. And this is a really powerful way to buy a note, especially if you're building a small dollar IRA, because depending on the size of your IRA, you might have to start with small investments until you grow it to large enough, maybe to buy a piece of real estate or to buy a whole note. And so we're going to just talk about what is a partial and what are the benefits of a partial, both to the person selling the note and to the person buying the note. And then we're going to do a couple of case studies, because we all learn best through real life examples. So of course, with Quest being based out of Texas, we got to have a Texas example, but this works all over the United States. And we also have one that's kind of a specialized property where somebody took back owner financing on a building that was being used as a church. So that's always a fun one as well. Then we'll get into the amortization, how those schedules work, and how does the documentation generally work? And what happens if? So that's what people always ask me. What happens if it stops paying? What if it pays off early? Spoiler alert, that's a good thing when it pays off early. But we're going to talk about all of those things. So to get started today, I just want to talk a little bit about this limit of liability. And really, it's the same thing Haley said. I'm not an attorney. I don't play one on TV. I'm not a financial advisor. So I am just here showing some examples of transactions that we've worked with over the years. Before I started investing for myself in 1997, when I started in 1988, I worked for a securities company, and they had a whole team of attorneys. And it was so wonderful to just get to run in and talk to an attorney. And a lot of what I learned about partials came from working with them as well. And so it's the same kind of strategy that I use for my own investing. But if you decide to do this, definitely consult with your own legal and financial advisors. So what is a partial? Well, if you buy a whole note, just think of a note as there's payments being made and there's interest on it. And most of us are familiar with making payments on a note if we've ever bought real estate. So if you're going to buy a note, you're just going to be on the side of the bank. You're going to get assignment of the deed of trust and endorsement of the note. So when you buy all of the note, you buy the whole thing. You're buying everything that's left on it. So if you had a transaction that, say, had a 30-year payment amortization, you would buy all 30 years left. It's the purchase of all the remaining payments. It's the whole pie, if you will. So on a partial, you're just buying a certain number of slices of the pie. You're buying a portion of it. So in this example, if you had a 30-year amortization and there were 30 years of payments left, you could buy a partial there. If you bought half of it, you'd buy 180 payments, right? You buy the next 15 years of payments. But you can divvy up that pie in 1 or 2 or 3 slices, or 360 payments if each payment was a slice. So there's all sorts of ways that you can divvy up that payment stream. And so that's really what a partial is. You're buying part of the payment stream. So the best way, I think, to show this as an example is to start with a full purchase. So in this example, we're going to have a $100,000 note at 10% interest at $877.57. And that payment will amortize that note. It'll pay off in 30 years, which is 360 payments. Now, if somebody as a note buyer like myself wanted to buy this note and we wanted to take that 10% note rate and get a little bit better rate, we would discount what we would pay and we put it into a financial calculator and we would say, okay, for that cash flow, I'd like an 11% yield. What could I pay? And in that situation, if I was going to buy all 30 payments, I could pay $92,150. And you'll see that because I wanted a higher yield than the face rate of the note, I have discounted that note. If I pay $92,150 for a $100,000 note, there's a discount of $7,850. Now that discount's basically earned back over time as that note pays off, as it amortizes down. But that would be a full note purchase. So what about we took that same transaction and we turned it into a partial? Well, you still have the same full cash flow, 100,000 at 10% at 877.57 for 360 months. And I still want 11% yield, but I'm only going to buy the next 15 years of payments. So I'm just going to buy 180 slices of that whole 360 slices of pie. So if I put that into the calculator, I say, hey, I'm going to get 180 payments of 877.57. What would I pay if I wanted 11% yield? The calculator comes back and says, based on the internal rate of return, I could pay $77,210. So if I paid $77,210 for the right to receive 15 years of payments, that means the person selling the note keeps 15 years on the back end. So they sold the next 180 and then I get the 180 or my retirement account if I'm putting in the retirement account. And then at the end of that, then that signs and endorses back over to the seller and they collect the rest of the notes. So it's rest of the payments on the note. So the cool thing about a partial is in 15 years, that balance won't have paid down that far. So that buyer, that borrower on that note's going to still owe $81,665 on that balance, even though they've made 15 years of payments. So when you're buying those, you're buying really a big portion of the interest. So how could that be? Well, if you look at an amortization schedule, you'll see that when you start out, whenever you borrow money from the bank and they give you an amortization schedule, you're paying more interest at the beginning. And then as interest gets paid, the principal goes down and more goes to principal the next month. So there's sort of an arc. And on your amortization schedule, well, so much more starts out at interest. And with the partial purchase, you're buying a big portion of that interest when so much of that payment is going to the interest. So this is just an example. You can do this example out of an Excel spreadsheet. Basically, it just shows, what portion in the 15 years that it is, the green being the whole and the blue being the part that was purchased. So now let's put them back up on the screen together. I showed you full and I showed you partial. Let's see how they look side by side. So in this example, when we bought all the payments at 11% yield, 10% face rate on the note, we could pay $92,150. Now, if we bought just 15 years of payments, then we could take a look at buying the partial. The next 15 years, we pay $77,210. So we paid a little bit less, We're still getting 11 yield. And then the seller gets that remainder back of 81,665 in 15 years. So from the seller's point of view, they were receiving 77,210 for selling the partial, and they're getting that balance back in 15 years. So that is what the benefit is to them, because if you take a look at that, they only received 14,940 difference of cash up front. But they got to keep that 81,665 balance in 15 years. So they receive a much bigger amount because they keep the power of compounding interest working for them as well. So the benefits of selling a partial are the benefits it provides. So benefit number one, it provides customized options. It's not sell the whole note or nothing. You can have options that fit someone's need. If a seller's selling a note, they might not need to sell the whole thing. They might need to just raise a certain amount of money to put a kid through college. We've bought partials where we just, for 4 years, every year, we'll just fund enough, we'll buy enough payments to fund the college tuition. We've done that before for people, and we just do that for 4 years, and then they retain the payments on the back end. The other thing that's great about it is it minimizes the discount. So as I showed you, if you're just buying the interest or mostly the portion of interest, you can leave a big chunk of it for the seller. So it minimizes the discount they're going to take when they sell their note. And the reason, number three, that you can do it that way is because it keeps interest working. And it creates future income, not only for the person selling the note, but for you, the investor as well, because I'm going to show you how you could buy a note and sell a partial, and you could keep that future residual in your IRA account, or however what entity you decide to use to buy it. So investors like myself, or institutional investors of the world like Fnac or Grand Bank, they all like partials. And the reason they like partials is it lowers their investment to value. So when you look at a note, you're looking at loan to value. How much does that borrower owe compared to what the property is worth? We call that loan to value. As an investor, you're saying, how much am I going to invest to buy that note, all or part of it, compared to what the property is worth? And that's investment to value. And the lower the investment to value, the greater the likelihood is it's a safe or less risky investment. Because should you have to, number one, if the buyer borrower has equity, they're more likely to keep paying because they have skin in the game. You as the investor, if you have a low investment to value, if for some reason that buyer borrower doesn't pay, then you have a lot of room or equity that if you had to take back the property, that you could be made whole by reselling the property. So let's put all this together and take a look at this Texas partial recapitalization. So I grew up in Washington State. Now I learned that I can actually live somewhere that is much warmer. And now I live in Florida, but I can buy notes all over the United States. And Texas is actually a very popular place to buy notes because, number one, you have the highest number of seller finance notes created. For the 15 years I've been tracking these numbers, Texas has always had the top number of seller finance notes created. So good amount of inventory. Secondly, you are a non-judicial foreclosure state. So if you have to foreclose, it takes less time and less money to do so. And you tend to have good property values, stable property values in general. So this was a 3-bedroom, 2-bath, single-family residence in Dallas, Texas, that was sold a few years back, because as you can tell by the sales price, it's on the lower side. It was sold with seller financing, and it was sold for $60,000 with $6,000 down. And the seller carried back the difference, which is $54,000. The seller was the bank. The buyer didn't go get a bank loan. The buyer made payments to the seller. And they wrote that note at 11.5% for 30 years at $534.76. When we bought this note, we bought the whole thing and we collected 2 payments. So we didn't sell the property and create the note. We bought the note from somebody who sold the property and created it. If you own property in your IRA, you could also sell the property in your IRA and take back a note in your IRA. But in this case, we bought the note from the person who sold the property and allowed the buyer to make payments. That's that seller financing we talked about. So in this case, we collected 2 payments, and then we decided to recapitalize, and we decided to sell a partial. So we found an institutional investor that bought 279 payments out of the remaining 360 payments. Well, actually, the remaining 358, right? Because it was 362 got made. So we sold 279 out of the remaining 358. And for the sale of that partial, we received $51,000. Now, here's the cool thing. That was actually more than we paid for the full. Now, the investor got a great yield. They bought it at 11.75% yield when they bought that 279-month partial. And we netted from the buying it for one price and selling a partial for another price about $3,500. But what did we do? We kept 79 payments on the back end, right? Because we only sold 279. And then after the investor gets those, then it reverts back and we get those remaining 79 payments. So this is really great if you can find a note to buy for one price and you can sell off a partial for that price or greater and keep some payments on the back end, then there's some profit made when you sell the note, and there's a whole lot more profit made when that partial reverts back. So here's what happened, and this often happens on partials. The note paid off before the 279-month partial was done. So what happened? Well, in this case, the note paid off in full in October of 2019, and our company received, because we bought this particular note in the company, not in the IRA, the company received the remainderment check. So that share of the remainderment, the full balance minus the investor's partial balance, was $17,262.37. So the only thing that would have made that deal better is if I had done that particular deal in a self-directed IRA account, because then, right, it would be a tax-free or tax-deferred, depending what type of account you have. So that is really the beauty of partials, because we made a little bit of money up front. We sold a partial, we kept a residual interest. And then when the note paid off early, we got the present value of that residual interest. So let's look at one more example, because I know lots of things are going through your head, and we'll come to the document side and how that amortization works. But let's look at one more example. And this is our church note. And this was actually retail space in Houston. So when you think of churches, you probably think of the big buildings with the steeples, right? And those types of buildings tend to have not a lot of alternative uses. But this happened to be a basic little unit in a strip mall, or, just a commercial strip center basically there. And they used one of those retail spaces as a church. And it was sold for $135,000 with $10,000 down. And so the seller carried back $125,000 at 10% for 30 years. And the monthly payment was $1,096.96. So in this situation, we did marketing. We found the seller needed to cash out of the note, and they were ready to cash out after 54 payments had been made. So the last example, the seller cashed out right away, right after they created the note. In this example, the seller collected almost 5 years of payments, not quite, 54 payments, before they decided to cash out. So we bought the whole note, and then we sold a partial of 186 months. And we were able to receive $95,000 for the sale of the partial. The investor was able to get 11.5%. And again, we were able to sell a partial for more than we bought the full. And that's just being able to be a matchmaker, knowing institutional investors or private investors that want a certain yield. And so we were able to net some money at the sale, and then we were able to keep 10 years or 10 payments on the back end. So how much money did I have in this deal? Zero. How much money did I have in the last deal? Zero. Now, if you're going to do these as self-directed IRA, I definitely recommend, I know Nathan and Quincy, a lot of people talk about, you need to have some kind of an investment, right, out of your IRA. So you could buy the whole note. That's one way to do it, and then sell off a partial. Or you could have give that future value a certain investment amount that you're investing with that partial. So that's two different ways to look at it, but you've definitely got to have some money invested in it to keep it in investment. So this was a really cool deal as well, because we kept 10 years of payments on the back end. So how many people would like to get a 10-year cash flow of $1,096.96 a month, right? So 10 years of those, 120 payments of those. But what happened on this one, again, it paid off early. So I really want to show you the numbers of what happens when something pays off. So on a partial, this is what happens. You've got a full balance, balance A. You've got a partial balance, that's balance B. That's what the investor is owed that buys the partial. And you've got what's left over called the remainderment. So you've got three balances working. You've got the full, the partial, and the remainderment. I call them balance A, balance B, balance C. You could call it 1, 2, 3. You could call it the full balance and the partial balance and what's left over. But just remember, you've got those three columns that are working. So Schedule A is the full balance that's owed by the borrower. Nothing changes for them. You can't change terms of notes. That's a legal document. They only owe what's on that note. So as they pay, they have their amortization, and as they make payments, their balance goes down. Then you have Schedule B. That's the partial balance that is owned by the note investor. So that's what they get, the person receiving like the next 15 years of payments or the next 10 years of payments. And then you have the third schedule, and that's what's left over. That's the full balance minus the partial balance equals what's left over. And that's if you're selling the partial, as I showed in those examples, that's what you're going to get if it pays off early. So you've got the full balance minus the partial balance equals what's left over. So on the church notes, this is how this one ended up playing out. The full balance when the note was sold was 121,248, some change. The partial balance was 103,515. So if you take 121 minus 103, the remainder balance at the time that note was sold, the partial was sold, was $17,732 and some change. So what happens now as payments come in, the full balance will pay down, the partial balance will pay down, but what's left over actually is going up because of the power of compounding interest. So on this transaction, 12 years went by. So what, about 144 payments. And the buyer paid off early again. So we see on average, buyers pay off usually about on seller financing around the 10-year mark. In traditional lending, they say more towards the 7-year mark. Right now for traditional lenders, they're paying off a lot earlier because everybody's out refinancing, right? So when 12 years went by, the amortization, the amount the buyer owed went down to $96,915. The investor partial that bought those 186 payments, their balance had gone all the way down to $39,346. And the remainder balance, the difference between the two, the full balance minus the partial, was $57,569. So that $17,000 residual interest built and grew to $57,569 in 12 years. And that was the amount of the check that we received from the servicer. So pretty cool, right? I mean, these are great ways to grow small dollar IRAs. So how do you document it? Well, again, I'm not playing attorney, but we've done a lot of these deals. So I just want you thinking through how this would look. So first of all, we like to do a full assignment of the deed of trust, or if you're in your mortgage state, the mortgage. We don't like to see fractionalizing. I don't want to get into a whole long reason why, but in general, you don't fractionalize notes because you want to make sure you're avoiding turning a mortgage note into any kind of security. So you do a full assignment and full endorsement of the note. So there's a promissory note that has to get endorsed. Think of a promissory note as a negotiable interest, like a check. So when it gets transferred like a check, you'd turn it over, you'd endorse it on the back. So a note endorsement has something also called an allonge. That just means instead of the endorsement being on the back of the note, they just stapled it to it. So it's just a separate document. It becomes an allonge. But you've got an assignment of the deed of trust that gets recorded, or assignment of the mortgage. And then you've got an endorsement or allonge to the promissory note itself. And that transfers over the interest. Then you have the purchase agreement. And the purchase agreement, the purchase and sale that governs the terms of the note being sold, is going to look different. If you buy a full, it's going to be a full purchase agreement. If you're selling some of the payments, then that purchase agreement is going to read a little bit different because it has to say the investor's getting their payments, and then when they're done getting their payments, it's going to assign and revert back to you. So there's special language in the purchase agreement when you're doing partials. And sometimes there's a document called a request for notice, because of record, it looks like everything is a full transfer. So if there's a way you want to put your interest on notice that you still have some kind of residual out there, that is one option for doing that. And then there are amortization schedules. I think it's really important up front, whether you're the seller of the partial or the investor on the partial, that everybody looks at amortization schedule and understands how the balances get divvied up. Because like in all investing, there's some different ways to calculate that, depending on if you're doing the investment at the yield or if you're doing the present value of the payments at the face rate. There's different ways to do that. So an amortization schedule will make sure there's no confusion on that. And then whatever other standard documents you do. When we buy notes, we usually get a title report, we'll get a payment history, we'll get a BPO or evaluation. We like to know that the taxes are current, that the property is being insured. We like to check on the buyer's employment if we can. So there's other standard documents that you take a look at. And then if you were ever to buy some more payments in the future, there's a document that's involved called an assignment of remainder. So let's talk a little bit about what happens. Now, I know Eddie Speed and Martha Speed, they are big users of partials too. And he always compares them to a pizza pie, right? And I like to compare it to a pumpkin pie because I tend to think I like pumpkin pie. And also, I think it's not fair that the pumpkin pie only gets enjoyed once a year, right? In November. So I'm thinking we should bring back people for pumpkin pie all year long. So I'm promoting the pumpkin pie, but it's similar, right? It's taking up a bunch of slices, whether it's pizza or pie or a note, and just divvying up some of those slices instead of the whole pie. So the most common thing that happens on partials that I see is that they pay off early. It doesn't go the 15 years or the 10 years. And so you have to divvy up what's left over. Now, the downside of them paying off early is that you don't have the interest working for you for all those years. So if it's a 30-year note and they pay off in 10 years, that's 20 years of interest that nobody gets to collect. And so your residual interest doesn't grow as big as it could have, but it still grows great. It's still a great return. And if you buy notes at a discount, it even makes your return go higher because you're getting a return of your capital sooner. The downside is you just got to go out and reinvest it. You can talk to Quest or any companies, and they say that you've got to get your money out there working. Don't let it sit there idle because that wears away at your investment. So in my mind, early payoff is always a win. I just got to go out and reinvest the money. That's, there's worse problems to have. They call that first world problems, right? So early payoff is not a bad problem to have. Now, a different kind of problem that's not necessarily a good problem to have is if the borrower misses payments. So what happens if payments are missed? Well, typically the front end buyer of the partial has the right to be able to enforce their interest. Sometimes the residual interest holder will have an opportunity to come in and help cure if they so desire. But in the very worst case scenario, if payments are missed, then you look to the partial agreement and the note and deed of trust could be foreclosed. And normally the partial investor gets paid first and the residual interest holder gets what's left over. So it's very important to know what's left over or not, and whether you would let money ride on that deal or not, or how much you'd invest in it. So that's one, always plan for the worst case scenario and make sure that there's enough room there for you to recoup your investments. Other things that happen, we've definitely had this happen over the years, is that the residual interest holder passed away and the payments had to go to their heirs or assigns. And so that is another thing you've got to make sure that, make sure that people who are handling your estate, if you're doing these or handling your retirement account or going to inherit your retirement account, they understand the assets that are held in there and that they know what's coming to them in the future. Another common thing is the first right of refusal. So there's language in most agreements that if somebody wants to sell the rest of their payments, that the party that bought the first partial would have the first right to make an offer on those other remaining payments as well. And I like to have that if I'm buying a partial. I think it's fair if I'm selling a partial, the person I'm selling it to gets the first chance to buy the rest of the payments. Another thing that can happen, this has also happened to me over the years, is that I've sold partials to an institutional investor and then they have sold their assets somewhere else down the line, or they've gone out of business and somebody else took them over. And so you do, if you're the seller of partials, have to make sure you're keeping track of those and where they go and if they're paying timely or not. You don't want to find that out down the road. Sometimes there can be servicing issues. You've got to make sure. I always encourage people to use a third-party licensed servicing agent that collects the payments from the buyer, the borrower, and makes application to principal and interest, keeps track of the taxes and the insurance. And there are some servicers out there who will also keep track of the partial balances. So that's a great way to handle it if you're doing partials as well. So I always encourage people in all of these situations, use professionals. Don't go it alone. And that will really help make for smooth transactions. So one of the greatest things about partials is you can be creative. So there you can buy in one way, you can buy a full and sell a partial. The partial I like to use when I buy, I like to use it at the face rate of the note. And when I sell, I'd rather use it at the pay price at the yield. And when you run your amortization schedules, you'll understand there's a difference between those two. And to be able to do that, you've got to learn to use a financial calculator. Or you don't have to use a financial calculator. You can use something like T-Value software or any other amortization software that shows how things pay off with interest over time. There's another kind of cool concept out there. It's called 10 for 12. And there's more than one way to apply the 10 for 12. But one way you can apply it is with partials. So you could say to someone, I'll buy your next 12 payments and I'll in the future, and I'll pay you 10 payments amount. I know you can also do that if you're paying rent. To someone, you can say, I'll give you I'll prepay my 12 payments of rent, and for the amount of 10 payments. So whatever the payment is times 10. I know Jeff Watson just taught a really great class on micro lending, basically where you could loan a landlord out of your retirement account the equivalent of 12 payments for 10. So if you got the right to receive the next 12 payments, and they received a loan for the amount of 10 payments. So the payment times 10, but the IRA gets the next 12. So that's not a partial, that's actually a loan, but it still uses a note and deed of trust. And it's the same kind of concept of discounting things over time based on the time value of money. So lots of ways to be creative on this. Another way that I love to be creative is something called a 50-50 partial. So I thought I'd just talk about one more example here. This is where we offer to buy half the balance for half the remaining payments. So you're buying the whole payment amount, but say if there's a 30-year note, you just buy the next 15 years of payments. Or if there's a 20-year note, like in this example, you just buy the next 10 years of payments. So in this example, we've got an $80,000 note at 9.75%. It's paying at $758.81 for 20 years, 240 months. And a lot of sellers of notes don't like to take a discount. So you could say, okay, I will buy half your balance for half the payments. So if your balance is 80,000, I will pay 40,000 and I will collect the next 10 years of payments. So it's 80,000 over 20 years. I'm going to do 40,000 for the next 10 years. And the seller gets to keep his or her remaining 10 years of payments. And again, with interest working, the balance at the time of reassignment in 10 years, that principal balance will still be over $58,000. So if you put this into a calculator, you say the basic principles, N is the number of months. I'm buying 120 months. What's my yield? Well, we're going to solve for that. Present value, I've invested 40,000 and I'm going to get 758.81 a month. No balloons or anything. So if I got a payment of 758.81, I invested 40,000, I get that 758.81 for 120 months. What is my return? What's my IRR? Well, if you put that into financial calculator, the really great thing is it's 19.46% yield. And to the seller of the note, they're happy, right? Because they got their 40,000 for just selling half the balance for half the payments. So partials are really powerful because you understand the time value of money and interest, and you can create these win-win situations using the power of compounding interest. So I wanted to mention that partials are just one exit strategy. I've got about 15 exit strategies I use when I buy notes, and I'll be doing a presentation on those exit strategies at the upcoming Cash Flow Expo. And Cash Flow Expo is something my husband and I put together. And I know Haley's going to be on a panel. And I know Quest is also speaking at a panel there, or excuse me, a primary presentation there. And so we are really excited about this. We invite everyone. It's online, it's virtual, as so many things are. It's February 18th through 20th. There are actually 30 speakers over 3 days. And the really cool thing is that you can attend free by logging on each day and watching the sessions. And then if you can't catch the sessions, or you want to buy the recordings, they're available for a very affordable price. So I'm going to leave this on the screen for a minute, and then I'm going to hop over to the chat, because when I do partial presentations, there's always lots of great questions. The presentations I've done for Quest have actually been as much fun in the chat and the Q&A session, and sometimes it's gone as long as the main presentation. So I really want to let you know that you can request a copy of the slides by emailing me, just old school email, tracy@noteinvestor.com, and I will email you back and attach the slides as a PDF. And if you're interested in catching Haley or Nathan Long or any of our Cashflow Expo speakers, you can go to cashflowexpo.com to grab your free ticket. And I'll leave that on there for just a second. And then I'm going to stop the screen share and come back on.
Awesome, Tracy. Great information as always. We are getting a ton of questions coming into the Q&A box right now. One of the most common questions that we get here, I think pretty much every time you present, is could you name a few note servicing companies that you would maybe recommend for people?
Absolutely. So this is pretty cool. And this comes around to something else I wanted to talk about. We did a best of notes, like, the best of that they do for the different cities. Well, we did a best of notes, and we had nominations for who people thought were the best in each category. So we, first of all, I want to say congratulations to Quest Trust Company, because you won, not only nominated, you won the category for best self-directed custodian for note investors. So congratulations. Yeah.
Thank you.
Yeah, and we had a lot of entries, and there's a lot of self-directed retirement account companies. So congratulations for that. Another category that we had was for servicing companies. So there were quite a few on there. So the one that won last year was Allied Servicing, and I know particularly that they do partial servicing as well. August REI, they're local there to Texas. Texas Pride, FCI Lender Services, Madison Servicing, SN Servicing, Reps, which used to be NAA. I'm sure I'm leaving somebody off, but if you go to noteinvestor.com and you'll see the best of notes category there, and you can see the ones that were nominated for that. So those are some of the ones that we've used over the years. I know FCI is one of the most popular because they do all 50 states. I know there's another one, National Servicing Center, the Standens, they're a family-owned company. I think they service at least 20 or so states. So you do have to check that your servicer's licensed in your state. It's always nice if they're also located in your state, but that's not a prerequisite. But you have lots of good ones in Texas as well.
Mm-hmm. Awesome. Yes. And I tried to put as many of those names in the chat as I could, but guys, be sure to check out noteinvestor.com. I also put that in the chat for you. This is a good question from Michael. Michael wants to know, regarding your Texas recapitalization example, did you purchase the note with the plan to sell a partial, or did it just happen to work out that way?
So sometimes you know, sometimes you don't. Sometimes you know when you go to sell it. And in that particular case, we did a partial because the investor said that we were reselling to had a investment to value limit for that deal because of what the credit was. And so we could get them to invest pretty much the same amount for a full as we could a partial. So why would we sell the whole thing? Sometimes you don't know to ask that question. So that's something I tell people, make sure you understand, why did I get that price for that note? If I got it because my investment to value was to maxing out, then it's not a yield issue. Then that tells you, well, then what's the yield you desire? Because then I can figure out how many payments I need to sell you for you, the investor, to get the yield, and for me to get the maximum out on the ITV. So sometimes you go into it knowing, and sometimes you figure out that's its best exit strategy. If you don't have the longevity of experience to be able to figure out all those exit strategies, and you're looking for the certain thing, then it's better to have those investors lined up, at the funding table. But if you have IRA funds that you can buy and hold and service, and you have a servicer and then sell off a partial, that's one way that you can do it as well.
Mm-hmm. Awesome. Great answer there. And probably our second most popular question we always get with these classes is, where do you find notes to purchase? Is there a platform for this? How can I find some notes to buy?
All right, so that's a great question. You've got multiple ways to do this. Some are old school, some are new school, and some take more time, some take more money. So the easiest place to find notes is to go to note listing platforms, which are a fairly new thing. I don't own any note listing platforms, but I can tell you that notesdirect.com and PaperStack are two of the most well used for individual investors. So that is one place that you can go. You've got to make sure you're looking for the type of assets you want, whether they're performing or non-performing, contract for deed, note and deed of trust, note mortgage. So really make sure you set your idea of what your purchasing criteria are before you just go in and start, shopping for notes, right? Understand what your investment mentality is. Now, those are what I call retail platforms. So somebody's gone through the hard work of finding the note. So those are available for sale, but they're not going to be your highest yielding deals. Now, if you're just looking for a good investment for your self-directed retirement account, and you're looking for long-term interest income, you don't want to create a whole marketing machine for that, then that can be a good option, right? There's times that it's okay to pay retail. So if you're looking for the wholesale side, then that's where you've got to go out and find notes for yourself. So you can do that through networking. There are lots of people who buy and sell notes through their self-directed retirement account. So you've got your networking on your, first and third Wednesday?
Yes.
Yeah, networking's always good. There are also ways you can work with professionals. So you could work with real estate attorneys, you could work with CPAs, financial advisors, anybody who knows someone's finances, that they're getting a payment that comes in. We've gotten referrals from retirement homes where people were selling their notes before they were admitted to for assisted living. We've gotten referrals from mortgage loan originators because somebody was receiving payments on a note they owned and they wanted to sell it off because they wanted it off their credit to be able to go buy another property. So, think creatively. Then there's very old school, which is buying a list of these notes. So these are recorded, right, in the counties around the United States. So you can purchase a list of seller finance notes. These are where individuals or companies that owned the property sold and took back financing. They're not marketing to Bank of America or Wells Fargo or anything like that. They are looking at the seller finance notes, and you can direct mail them. Some people now take that list and they will do a more modern version of texting them or doing outbound calling. So that's another methodology. Some people like to, just go type "sell my note" in on Google and you'll see all kinds of pay-per-click ads that come up. So some people like to do ads as well. We've done all of those methods over the years. Our favorite and the one that won the best of notes is networking and referrals, because it's always nice to be able to do repeat business and know who you're dealing with. If you know people who are regularly buying and selling property and creating notes, that would be another way. Something called reverse ad marketing. That's another method where people say they're selling property with owner financing, and you call them up on the phone and say, "Hey, I buy notes. Do you have any you want to sell?" So those are some of the basics that, that can be its own whole webinar, right? But those are some of the basic ones.
Yes. And it's funny, anytime we host any presentation over notes, we always get that question. So great information there. And to kind of add on top of that, do you offer any other training for notes? I know you guys have your big event coming up, but what other resources do you offer for note education?
Well, that's kind of you to ask. We do noteinvestor.com. That's the place to tell people to start, because we have 300 now free articles on there with some basics of note buying, right? So I'm big on educating people. I love the note business. It's been good to myself, my family, as we have longevity in it. And so that's a good place to start. We do offer affordable trainings. We sort of break them down into different master classes. So we have, some people want help marketing for notes. Some people want help with due diligence. So we do have sample documents and checklists and those sorts of things. We've got an affordable class on just how to run the calculator on time value of money. We do a mastermind where people network and do some deal sharing. And so all of it's very affordable. It's like $97 a month if you want that sort of a thing. So I'm not here to sell, but we do make those things available. There are other good educators out there as well. We're not the only great educators. So, when we got started in the 80s, nobody talked about it. They kept it to themselves. And I think a lot of people doing it now realize that the more people doing it, the more opportunity there is for us all to do deals together. So I know Eddie Speed's another big educator. He's a big supporter of Quest as well. So there's a good, just make sure the person you're learning from has been in the business a while. That's my one caveat. It doesn't have to be me, but make sure they've had some longevity in the business.
Yes, great information there. And there's so many resources out there. And, I'm glad that Quest can help bring them to you guys. This is a good question. We actually got this from two different people. We may have covered this a little bit, but what happens if there's a foreclosure on a partial? How is each party affected?
Great question. So the very first place you would go to answer that is the purchase agreement. And they're not all the same. And your attorney might advise you on different things. However, in general, it usually says that the party that's got the most money invested in it, that's getting the big chunk of the payments, can pursue foreclosure. And if they get the property back, that they get paid and made whole. And if there's enough left over, then the residual interest party gets what's left over. Or if there's excess, because sometimes there is, right? If property sells for more than what's owed, then how is that divvied up? So the purchase agreement is what says that. But most of the times the investor gets made whole and the residual interest gets what's left over. Now, that's why you've got to make sure how much are you investing for that residual interest. The least amount you have invested in it is the best because you have the least amount at risk. And it's possible to do that, as you saw with these partial examples. Now, sometimes people say, oh, that's great. Those were from a few years back. Well, I'm going to tell you that right now, I recently had some funds available in my IRA. I decided to buy a note off one of the note listing platforms because I wanted to show people you really could do it. You don't have to be in it 30 years to do this. And I presently getting ready to sell a partial on that. And yes, I could sell that partial to a private investor, to another IRA. But in this case, I'm looking at selling it to one of the institutional investors like First National Acceptance or Grand Bank, because I want to show people that there is the ability to do this, without having had the network of 30 years experience. And so, yes, these deals are still out there. You can't do this on every deal. I wish you could. I say partials are probably on average somewhere around 20% of deals. Some companies say they can do closer to 40%. That doesn't work on every deal, but it does work. When it does work, it's magic. So you just keep your eye out for those deals that will work on.
Awesome. And kind of speaking of, looking out for those deals, is there a minimum amount that you can purchase a partial for?
Well, $100. I don't know. What do you suggest to people if they're using the IRAs? I don't want to put you on the spot, but what's your kind of rule of thumb at Quest?
Yes. And it's a great question because we get a lot of people that ask us, whenever they do have small amounts, but there does need to be some sort of consideration. Typically $100 is enough to get it started, but you do want to make sure that, the growth in your IRA is really from the investments that you're holding and not you doing a bunch of work like wholesaling or things like that, outside of the IRA. So if you have more questions about that, reach out to us at Quest. We can kind of walk you through it and things like that.
Excellent. That's a really great way to explain it. You need to have consideration. It needs to be a real deal that you could do, right? There has to be something that's in there as well. Yeah.
Yes. And this question, and I'm going to see if I can word it correctly. So the partial buyer that's buying the interest heavy front end payments, is that subject to higher taxes since it's more on the interest portion? Is that right? I don't know if I'm phrasing that correctly.
That's where I bring out I'm not an attorney and I'm not a financial advisor. It all has to do with, well, first of all, great reason to be doing it in a self-directed retirement account, because then we don't have to worry about that question, right? The second thing is like, did you sell the property and create the note? Because then it has to do with the installment sale provision in the IRS tax code, and that has to do with your basis of what's in there. Okay, did you buy the note and your S Corp, and now you've got to figure out what your bases are. I mean, when you buy them in your company and then the future pays off in the future, then, that could potentially be regular income, ordinary income. So a lot of it has to do with how you bought it, where you bought it, how you created it. So the answer is going to differ. So I'm giving you those ideas so you can think about it and talk to your accountant. I'm not trying to be cagey, but it really will depend on how you entered that note, what the tax ramifications will be.
Yes, great answer. Call your CPA, but not just your CPA, but a knowledgeable CPA who is familiar with real estate and note investing. Tracy, I think we have gotten to all of the questions. Some of them were IRA related, so we got those answered there in the chat. But we did have one question here. I don't know if you can put your contact information back up on the screen, but we did have a couple of people ask, what is the best way to get a hold of you if they have a few more questions? Maybe they want to chat one-on-one with you. What's the best way to go about that?
All right. I will pop it back on the screen. Do you see it there?
Yes, we do.
Okay.
Perfect.
Excellent. All right. So they can reach me at tracy@noteinvestor.com. That's probably the best way. You can visit our website. I do some limited scheduling calls through Calendly. And so especially if you have any questions about any of the memberships or anything like that, but I really do answer my email. So tracy@noteinvestor.com is the best place to get a hold of me.
Mm-hmm. Yes, you and Fred both are very, very quick to respond by email. So it always makes planning these events, a smooth process, which I know you guys understand from your end as well. But Tracy, before we sign off for the day, do you have any last kind of closing thoughts or anything that you would like to leave our audience with for the day, other than to sign up for the Cash Flow Expo?
That's right, in QuestCon. And to make your contributions to your IRA if you haven't done that yet, because you can still make last year's, right, until April 15th. I think I get a little philosophical once in a while, so you kind of open the door. So I'm thinking a little bit about this. I think it's a good time for all of us to take a breath and realize that we do control our thoughts and our actions. And it's been a crazy year, and both with coronavirus, and my heart goes out to anybody who has been ill or has family members who've been ill. So that uncertainty has been hard. And then there's been the politics that have been hard, no matter where you stand on it. It's all been, a lot of turmoil. So I think it's time to take a breath back and think, what can I do to positively improve my situation? So for me, it's notes. For someone else, it might be real estate. For someone else, it might be taking charge of the retirement account. For someone else, it might be finding a new source of income if their job has been affected by it. But I want to encourage people to know that you can control what happens in your life. And so surround yourself by other people who believe that, and you're in great hands when you're coming to these networking events. And so I think, in my field at least, that I see there's going to be a large opportunity to help people in the future, because they are going to need that. And I think that the banks are going to start getting more restrictive on the type of lending that they do. I think that the low interest rates have propped up the real estate markets in a lot of areas. And there's, so I think that there could be potentially a reckoning there. And I think that seller financing is going to fill a big need when the banks tighten up. And I don't say that because I have a crystal ball. I say that because I've watched the markets for 30 years. I've tracked seller financing. And whenever the banks tighten up and there's less traditional lending, the need and the number of seller finance notes goes up. It makes sense, right? Supply and demand. People don't always use seller financing unless they have to. I get that. Sometimes it's not their first choice. So these are the different things I'm seeing, and we're positioning ourselves for. I know you've got lots of great people like Jeff Watson that talk about what's coming down the road, and Eddie as well. And so we all, if you listen to us, we might say it a little different, but we all kind of saying a similar thing. And so I encourage people to look forward to how can they position themselves to help people in the coming years, because there will be opportunity to help people and opportunity for you to make a fair profit as well.
Mm-hmm. Awesome, Tracy. What a great note to end on. It's so nice to have you here. And guys, it's so true. We've all been through a lot this past year. Things have changed quite drastically, but keep moving, keep going forward, keep continuing to build those relations, reach out to people that can help to add value to you and that you can learn from. So Tracy, this has been great. Thank you so much for joining us. I'm
Thank you.
excited to join you at your event here in the upcoming weeks. Guys, be sure to reach out to us if you have feedback, if you want more information, reach out to us here at Quest, reach out to Tracy. We both have a lot of great resources for you guys. And that's all I've got. Y'all have a great day. We hope to see you in our other events. If you want to rewatch this, check out our YouTube page. Other than that, I'll see you later.
All right.
Have a
Thanks,
good one.